Hi, this is PR Sundar. Welcome to this special series of videos to create awareness about trading. And in the last few videos, I spoke about the typical journey of a trader, 99% people lose money, etc. And in this episode, I am going to talk about a very important topic called position sizing. And a story I've told in my last video. Let me repeat the story and then let me complete the story. In my last video, I said somebody will go and learn technical analysis and will bring 10 lakh rupees into the trading account, and one lot is 1 lakh is the margin money, and he will go long in 9 lots in ICICI Bank. And then that day evening the news will come, ICICI Bank chairman involved in some scam, and the next day gap down 4-5%, and this guy will lose 4-5 lakh rupees, and the broker will square up the position. So that is only half the story. And then this guy, what he will do, he will go and look what has happened, what's wrong, go to the social media and other places, and he will get the new gyan. Position sizing. Position sizing is very, very important, and you should not be over trading. Then he will understand. Just like Lord Buddha got the enlightenment, so this guy will get enlightenment after seeing the Twitter gyans, technical analysis. And this time HDFC Bank will be showing long. Again he will bring another 10 lakh rupees, put it in the trading account. Now HDFC Bank is showing long. Do you think he will dare to go long 9 lots? No. Why? Position sizing. And this time he will go long only in 2 lots. And this time HDFC Bank chairman, no scam, nothing, and things will go very well, and this guy will make 10% profit. Then he will come to the Twitter and other social media, he will start shouting, look, the power of technical analysis. When the stop loss hit, nobody will talk about the power of technical analysis. When the target is hit, they will talk. And I made 10% profit. What the humbug this guy is talking? He has got 10 lakh rupees. He dare not to invest all the 10 lakh rupees. He dare to invest only 2 lakh rupees. And he got 10% return for 2 lakh rupees. That means he got 20,000 rupees only. Because the remaining 8 lakh rupees is unutilized. His total capital is 10 lakh rupees and he made 20,000 profit. That is only just 2% for his total investment. What is the big deal making 2%? That too after so many stop loss hit. So there is nothing big. So if you have got 10 lakh rupees, if you have taken 9 lots, which is more, and if something goes wrong, the stop loss hit, the loss is going to be very heavy. And if you take only 2 lots, even if you get 10% return, the overall portfolio return is going to be only 2%. So then what is the right position sizing? If I got 10 lakh, what is the right position sizing? 2 lots, 3 lots, 4 lots, 5 lots, 9 lots? Which is the right position? Nobody knows. For that you will not get the answer in social media. And if the guy who is talking about position sizing, the first question you have to ask him, how much money he has made by following all these disciplined rules. And these people have not made money. So what is more important here? There is no right position sizing. It differs from time to time. So therefore, what is the best advice and what we do? And we teach that in our workshop. Let us say you have got 1 crore rupees with you, and you go and set up a business for 1 crore, that business may run into some trouble. In that case, you will be in trouble. But in case if you have 5 crore rupees, you can put 1 crore rupees in business, 1 crore rupees in bank FD, 1 crore rupees in equity market, and 1 crore rupees you can invest in gold, and 1 crore rupees you can put it in real estate. So like that if you do, that is called diversification. So if you have got 5 crore, business, FD, shares, real estate, gold. You put it. In case if your business comes into some trouble, what you can do, you can break the FD, can bring the money and stabilize the business. Once the business is stabilized, that money can move back to FD. Even after bringing 1 crore FD, still the business is in trouble, and you can pledge the gold, and then you can get some loan, and then can try to stabilize the business. But in case if your business has been doing very well, you still the remaining 4 crore, they do not sit idle. They are getting some return from the respective investments. So there is no right position sizing in stock market, but as I gave you real estate, gold, shares, FD and business, in stock market what we do, within the stock market we do lot of diversification. And in fact, I always say you need to have 2 things if you want to be successful in stock market. One is H, the other one is H. So the H is different and the H. Any position we take H to position only. But despite that, we don't put all the money in one particular strike price or in one particular strategies. So we choose many strategies and many strike prices. So we diversify. We diversify across the strike prices, we diversify across the time frame, and we do lot of diversification. And that is why we are able to make some good return despite investing about 80 to 90% of our capital all the time. So anyway, the workshop is a 2-day affair which I can't explain now. Even if it is possible, I will not do it because I get a lot of money in training. So therefore, what I can tell you very simply, it is easier to say anything in this world. Stop loss is important, position sizing important, risk management is important, but all this important and many people still lose money in stock market. So let me tell you, it is not about position sizing, it is about diversification. Once I met Mr. Velumani, the CEO of Thyrocare, promoter of Thyrocare, and there are so many people sitting there and they all were talking against me. No, Mr. Sundar is not a good trader. He talks against position sizing, he talks against stop loss. And then this Dr. Velumani was listening to them very patiently. At the end, everybody finished talking. And he asked them one question. How many of you think that Mr. Sundar is wrong? Then everybody raised the hand. Then he said, what Mr. Sundar does is right. So then he started talking in Hindi very nicely, but I can't talk in Hindi very nicely. And he said, if you are thinking like a common man, you will also be forever be a common man. If you are thinking like a padosi, you will forever be like your padosi only. But everyone want to be different from others. But nobody want to think different from others. And then he said, I am not a trader. I do not know anything about trading. And I really don't understand what you people are talking, the technical things, stop loss, position sizing and this and that. But without knowing all these things, I can tell one thing. In front of my eyes, I can see a group of people, about 20 people. The 19 people think in one way. There is only Sundar is the only one who is thinking the other way. So, if I think logically speaking, either Mr. Sundar must be too stupid or Mr. Sundar should be too intelligent. And of course, Mr. Sundar cannot be too stupid. If that is the case, he would not have come to this level. And it was a conference where I was a speaker, where Dr. Velumani was also a speaker. But the 19 people who complained about me, they were not speakers. So he said, right now I'm giving you this. There is one guy thinking different from others. Either he must be too stupid or he must be too intelligent. But only the time will tell whether he is too stupid or too intelligent. But my opinion is that he is too intelligent, he is not too stupid. Well, I have proved it, and this has happened exactly 3 years before, in 2018, somewhere in a star hotel in Mumbai. But all those 19-20 people who spoke against me, where are they? Nobody has achieved anything. So, anybody can give all kinds of, one guy gives some gyan, they just copy and paste. And sometimes I really don't know from where these people get the idea. One day in my Twitter timeline I saw, stop loss is very, very important. Then he put the Mahabharat scene where Saguni is gambling. This is the best example to know what will happen to you if you don't put stop loss. And stop loss is another story. That will be my next video. So right now, let me tell you a very, very, very important message. Don't believe whatever people talk about stock market, and you can believe only if they achieve something in the stock market. And there are other ways, other things that you should understand if you want to be successful in stock market. And that is what we are doing. That is why we are successful. And last financial year, my total income exceeded 25 crore. Once again, my famous statement, I repeat, whatever people do in stock market, everything is wrong. Hope you enjoyed the video. Thank you for watching.